Assalamualaikum and a very good morning to all. We are from Group 1. We will present Chapter 2, that is Audit of Revenue Cycle. Overview of Revenue Cycle. Revenue is the lifeblood of any business. The entity may not exist if there are no cash inflows. First, let's define what is a revenue cycle. Revenue cycle is a method for defining and maintaining a process that is used to complete an accounting process in order to record revenue generated from a service provided. The revenue cycle begins with a customer order, proceed to the exchange of goods or services, and conclude with a cash payment. It is critical for every business to generate sales or other form of revenue. This is important for auditors in verifying the revenue. Auditor must evaluate the risk associated with the revenue cycle. The auditor must conduct tests to ensure that the entity is free from error or fraud. Auditor can provide minimal assurance that the company's recorded results are accurate while conducting substantive and control tests.
Hi, Assalamualaikum, and my name is Nurul Izzati binti Zakaria, number matric 273183. So I will continue our group presentation by explaining about the classes of transaction. So in the revenue cycle, the auditor shall obtain an understanding of the entity and its environment to enable the auditor to understand about the classes of transaction, account balance, disclosure that has to be expected in the financial statement. Therefore, there are four main components in the revenue cycle, which is sales transaction, cash receipt, account receivable, and sales allowance, sales return and allowance. So for the first main component in the revenue cycle is the sales transaction. Sales transaction is the selling of product or the provision of services in exchange for the money or credit. For example, account that involved under this transaction is the sales account, allowance for uncollectible accounts, and bad debt expense. Next is the cash receipt transaction. Cash receipt is the receipt of cash from customer in the payment for the goods or services. For the example, accounts that involve under this transaction, cash receipt transaction, are trade account receivable, cash, and cash discount. So for the third one, we have the account receivable. Account receivable are unpaid invoice transaction that have been kept by a firm for goods supplied or services rendered that have not been paid by for customer. So as an asset, it is recorded under the balance sheet. So last but not least is the sales return and allowance. Sales return and allowance is the return of goods by the customer for credit or cash. So for the example, the account that involved under sales return and allowance is sales return, sales allowance, and the trade account receivable. So that's all from me, and I will pass to my next member.
Assalamualaikum and a very good day to Dr. and my fellow friends. I am Nur Alisanda meeting Muhammad Nasir 272624. So today I would like to present about the business function and documents. So the first business function is customer's order, and in this business function there are some potential misstatements, which is sales are made to unauthorized customer. In order to avoid from the potential misstatements to happen, there are some control procedures that can be done, which is to have a list of reviewed and updated customers list, and to authorize each and every sales order. Besides, in this business function, there are one document involved, which is sales order form, which consists of the name of the product, quantity, and etc. So the second business function is credit approval. In credit approval, the mistake that we have to avoid is making credit sales to customers with poor credit rating by checking their credit limit prior to approval of their credit sales. And we also can make a credit check for all new customers of the company. The third business function is issuing goods. In issuing goods, every shipment is enclosed with a shipping document called bill of lading, which is pre-numbered. In issuing goods, besides using bill of lading, there are also another control procedure that can be used, such as all issued orders are checked with approved sales order in terms of quantity and type of goods by independent personnel. Besides, we can also use segregation of duties in issuing and shipping the goods. The fourth business function is invoicing customers. In invoicing customers, documents involved are sales invoice, which is pre-numbered. Next, the pre-numbered sales invoice will be paired with the pre-numbered bill of lading in the business function of issuing goods to ensure that there is no fictitious sales made. Then, the pre-numbered bill of lading are also matched with the sales order form to ensure that every price and quantity in the sales invoice are tallied. The next business function is recording the sales. In recording the sales, controls should be established to ensure that all sales are recorded and no overstatement or fictitious sales are recorded. In addition, the amount of sales should be accurately recorded and in a proper period. In order to establish the control, every sales invoice are enclosed with matching bill of ladings and approved sales order form. Besides, total of sales invoice are checked against total of sales account of the customers. Next is collection of cash sales and receivables. You have to make sure that every cash sales and receipts are properly recorded. One of the ways to make sure that it is properly recorded is to use cash register or point of sales devices. Last but not least is adjustment to sales and receivables. Every adjustment made must be supported with relevant and appropriate documents. Thank you.
Hi, I'm Izin Alish, metric number 273033. So I will proceed our presentation with management assertion. So basically, management assertion are used to assemble sufficient information to evaluate whether sales and receivables control are operating effectively. So in auditing the revenue cycle, the sufficiency of the evidence prepared focus on the criteria of existence and occurrence, completeness, accuracy, cut-off test, right and obligation, valuation and allocation, and lastly, disclosure. So for the first point is existence and occurrence. This assertion controls display that the account receivables balance on the income statement should represent an equal amount owed to the creditor at the period of financial statement of revenue. So this assertion is crucial as it to determine that whether the sales transaction recorded in the customer systems are real. Secondly, the completeness assertion verifies the financial statement where the auditor should ensure that all payment owed to the company at the date of financial statement are represented in account receivable. Okay, third point is assertion of accuracy. It is to ensure that the documentation procedure of revenue are recorded accurately on sales and receivable. So next is cut-off test. So basically, cut-off test consists of two types, which are sales cut-off test and also cash receipt cut-off test. So sales cut-off test is to ensure that the current year sales and receivables are recorded in the current period, and therefore the changes in current year sales and receivables are reflected in inventory. Meanwhile, the cash receipt cut-off test is to determine if cash receipts are documented within a reasonable time frame. It is to guarantee that cash and receivables are represented correctly. So next is right and obligation. This objective of assurance is to inspect and identify that whether the organization has a legal entitlement to the reported account receivable. And next is valuation and allocation assertion is to ensure that the account receivables amount accurately reflects the net receivable value. And lastly is the disclosure. disclosure assertion is to ensure that the disclosure of assertion of revenue cycles is the process to verify account receivables and revenue reported for the period are properly described and classified in financial statement. That's it for me. Thank you.
Assalamualaikum and good day. My name is Nabila binti Syed Abdul Jalil, bracket number 272115. I would like to continue with the subtopic Audit Objective for Internal Control. Audit objective for internal control are designed to verify that the preferred outcome of control activity that have been done by a company or entity is achieved. This audit process is completed by judging whether the control procedure match with the predefined criteria. These audit objectives are linked by the management assertion. Therefore, auditors must have a thorough understanding of management assertion to perform our quality audits. Audit objectives for revenue and receivables are concerned with obtaining sufficient audit evidence for the transaction and the balances. There are 5 main key issues in conducting the audit of sales revenue and receivables. The first key issue is to ensure that the sales are either understated or overstated and the sales are genuine. Second, to ensure that the receivables are in existence and the amount are collectible. Third, to ensure that the provisions for doubtful debt are doubtful in terms of the collectability. Fourth, to ensure that controls and procedures in use are efficient and effective. And the last one, or the fifth, is to determine the adjustment to revenue are appropriate and acceptable. The most efficient way to conduct audits of internal control is to obtain some combination of assurance for each class of transactions and for the ending balances which is related to the account. The first class of transaction is transaction related, which consists of occurrence, completeness, accuracy, cut-off, and classifications. The second class of transaction is balance related, which consists of existence, right and obligations, completeness, as well as valuation and allocation. The last or the third class of transaction is presentation or disclosure related audit objective, which consists of occurrence, right and obligations, completeness, classification and understandability, accuracy, and also valuation. I think that is all from me regarding audit objective for internal control. I would like to pass to the next presenter. Thank you.
Assalamualaikum, my name is Ahmad Muhammad bin Zabal, my number 272884. I would like to present about the subsidy test for account. We know that subsidy test is audit procedure used to check financial statement and supporting document to see if whether there contain error or misstatement. This test need to use as evidence to support complete, valid and accurate assertion of the entity financial record. The first method is adequacy of allowance bad debt. We know that the risk of uncollectible amount of receivable should be assessed by the auditor. The auditor should review and test the process used by the management to know what type of estimate allowance for bad debt. There are two methods can be used. First is general allowance. The management use percentage to calculate the amount of bad debt. The auditor should make checking on the reasonable percentage that using by the management to ensure the procedure work politely. The second is specific allowance. This obtain independent review of specific information of the debtor to ensure the reasonable of bad debt estimate. Next, disclosure. The auditor should understand the disclosure requirement for disclosure of account receivable. This is the step for auditor can be performed. The first, review list of account receivable and determine their nature by separate by category. The second is review any credit balance in the receivable account, which is credit balance should be classified into the liability account. Third is review minute meeting or any supporting document such as contract or agreement related to the account receivable. And the last one is request for a management representative letter for any activity related into account receivable. The last one is designing subsidy procedure. There are three methods can be used. First is analytical procedure, which is confirm expectation and perform in three stages. First, review the understanding of an entity, whether any change or to sales and receivable balance. Second, to determine fluctuation in the amount of sales and receivable balance between current year and previous year. The last one is determine ratio of trend for gross profit or average collection period. And the second method is test of detail of transaction. Tests of transaction are used to corroborate tests of detail of balance. And tests of transaction are normally performed during an interim audit in the form of dual purpose test. And the last one is the last method is test of detail of balance, which is concerned with obtaining evidence about account receivable balance and do not concern about debit or credit transaction but the balance at the end of the period. And the last one is focus on adequacy of allowance for bad debt. That's all for me. Thank you.